2024 is almost coming to an end, and if you have been investing consistently so far, congratulations! 2023 and 2024 have been a fantastic year for investors, as the S&P 500 gave close to 30% returns each year. But as the market is hitting all-time highs after all-time highs, one can't help but wonder, how long is this going to last? Some of you might even point out that Warren Buffett is now sitting at a record cash position, and the last few times he did this, it was right before the 2000 dot-com crash and the 2008 Great Financial Crisis. Surely the market is going to crash soon, right? That's why in this video, I'll be sharing my outlook for 2025, whether I think the market will continue to go up or will it really jiba-boom and crash. Then at the end, I'll be sharing how I'll be investing going forward. But before I start, do join my 10,000 members Telegram chat group to discuss or ask any questions that you might have. Right now, there's no denying that everything looks good for both the stock markets and the economy. The war on inflation is now largely over, and inflation is now steadily trending downwards. The Fed is now starting to cut interest rates, which is good for both the economy and businesses, as lower interest rates means cheaper costs of borrowing. The US labor market remains strong, as the unemployment rate stays low and non-farm payrolls made a strong recovery last month after all the Boeing strikes and disruptions caused by some hurricanes. Meanwhile, Trump's re-election is good news for the stock market, as he is probably the most pro-stock market president in history. Like during his first term, he actually measures his success by how well the stock market did. This time, he'll be introducing more tax cut policies, deregulations, while dialing back on some of the antitrust policies. Plus, right now, there's over $7 trillion sitting on the sidelines, and theoretically, this should boost the markets even further, given that interest rates will continue to drop and investors start to feel FOMO after missing out on the stock market. Because of all these reasons, many analysts are bullish going into 2025, with S&P 500 forecasts ranging anywhere from 6,500 all the way to 7,000 points. Right now, the S&P 500 is at around the 6,000 level. So this will represent another 9% to 15% upside from current levels. Meanwhile, you can see every other investor turning into an investing genius, including me. Like here, you have an analyst coming out to say that Tesla, a stock that has a 106 PE ratio, is currently the most undervalued AI name and could reach $2 trillion market cap within the next 12 to 18 months. Tesla's market cap is currently at 1.26 trillion. So if he is right, the stock will double from current levels. Green Dragon, let's go! Then you also have the perma-bull, Tom Lee, who's super popular now. He appears in the media every other day. Everyone's quoting him as if he's the Tyson Ye himself. And of course, not forgetting Cathie Wood and her ETFs, alongside with all the crypto bros who are coming back in full force, just like the good old days in 2021. All this signifies there's excitement and exuberance in the stock markets, or what Tom Lee calls animal spirits, where stock prices are now moving based on human emotions rather than actual fundamental values. This is a time where many investors believe that there's nothing that could go wrong with the stock market, and they base their investing decisions on narratives and promises of greater future returns. Inflation, geopolitical tensions, economic risks. The world is getting more and more complicated. That's why you need to learn how to start investing now to secure your financial future. So, come to FSM Invest Expo 2025. It is the ultimate one-day event that brings investors together. Whether you are a seasoned investor or just getting started, you get to learn from various experts, discover a wide range of investment products from globally recognized fund managers, understand investment opportunities at interactive zones, win exciting prizes at lucky draws, enjoy exclusive perks and promotions, and most importantly, have fun together. So if you want to supercharge your investment portfolio and change your financial future, come to FSM Invest Expo 2025. Admission is free. Sign up link down below. See you there. But how overvalued is the stock market right now? Some would point out that the S&P 500 forward PE ratio is currently around 22. It is pretty near its peak, and the last few times it was this high, a crash soon followed. Oh, However, as Adam Khoo has pointed out, PE ratio may not be the right metric to look at because it doesn't take into account the growth of the earnings. For example, back in the 1990s, the average profit margin of the S&P 500 used to be around 7%. But now, due to technological advances, this average has now gone up to 13%. Here's another one. In the past, the average earnings per share used to be around 40, but now it has gone up to over 200. This means companies are now making more and more money today as compared to 30 years ago, and their earnings are growing faster and faster. Because of that, a better metric to use would be the PEG ratio, where you take the PE ratio divided by the growth of the earnings. Basically, what this means is that as long as the earnings can grow quickly, the higher PE is justified. If you do that, you can see that the PEG ratio is currently around the 1.26 level and is still not in the super overvalued territory yet, unlike during the 2000, 2018 and 2020 levels, where the PEG ratio were 1.5 to over 2.4. Nevertheless, this doesn't discount the fact that the S&P 500 is trading at a premium. So it is definitely getting expensive, but it's still not at the I'm going to crash now kind of level yet. So what's my outlook for 2025? Historically speaking, the first year after the presidential election tends to give the second highest return, with the third year being the highest. Not just that, if the president is re-elected, the market tends to give higher returns as compared to having a new president. This is further supported by the fact that if we have both a Republican president and a Republican-controlled Congress, the market tends to give rather decent returns. But what does history have to say about the bull market? On average, bull markets tend to last for 5.5 years, while going up by 180%. The current bull market started at the end of 2022 and has given over 71% returns so far. So if history was to repeat itself, we are still in the middle of the bull market and there's still a lot more upside to go. Though, the biggest fear right now is the high inflation suddenly coming back. That's because while some of Trump's policies are good for the stock markets, some of his other policies are bad for the stock markets. For example, he plans to introduce a 20% universal tariff on all imports and a 60% tariff on Chinese imports. At the same time, this could cause China to retaliate by raising their own tariffs. And there will be trade wars all over again. The last time this happened, the market didn't really like it. Not just that, Trump also plans to crack down on immigrants. With immigrants accounting for nearly 5% of the total US workforce, a mass deportation would cause economic growth to slow down, a surge in inflation, as well as increased budget deficits. Overall, the combined plans of his tariffs and immigration policies could send inflation going up by 4 to 7% by 2026. If this were to happen, let's just say we will see another round of rate hikes all over again. So with that in mind, how should we be investing now? Some analysts point out that certain sectors could do well under the Republicans' administration, such as energy, defense, financial services, pharmaceuticals, and telecommunications. So does this mean we should focus more on these sectors? Well, yes, but no, because according to history, there's no clear correlation between the sector's outperformance and the party of the president. Sure, you can see that Trump's oil policy is good for oil stocks, therefore oil stocks will go up. But during Trump's presidency, clean energy actually outperformed traditional energy by 43% per year. And during Biden's presidency, traditional energy has outperformed clean energy by 53% per year. As it turns out, rather than political policy, the markets will more focus on the growth and earnings fundamentals of these sectors, which tend to be bigger performance drivers. Not just that, it's also quite rare for presidents to deliver exactly what they promise. Like during Trump's presidency, he only managed to deliver 23% of his promises, while breaking 53% of them. What this means is that you should never change your investment strategy based on who's in office. Likewise, your investment strategy should also remain the same regardless of whether the market is at all-time highs or at all-time lows. Because there's absolutely no way anyone can predict whether a market crash is coming or not. Then some of you will point out the fact that Warren Buffett is sitting on a 30% cash position, while some other investors are rebalancing their portfolios to have more cash position. But this is just their strategy, which may not apply to you. For me, my strategy has always been the same. Always buy good companies that can consistently increase their profits over time while staying away from speculative ones. If you want to go into REITs or if you want to go into Chinese stocks, it's totally fine as long as you are okay with the risk and you know what you are doing. If you are too lazy to do stock research or don't have the time, a much simpler way is to just invest in ETFs. That way, you will always buy the right companies. If you buy all the companies, then just stay invested regardless of market ups and downs. Market up, you buy. Market down, you cry a bit, then buy some more. And over time, you will do well. So simple. Anyway, that's all for this video. Hopefully, you found it useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.